Yesterday we had a very packed day. We had the FOMC and the BOJ coming out with the minutes, and these made interesting moves in the market. My name is Samson Mzera, and welcome to this episode of the Market Watch series, where we take you through the news, the charts, and everything in between. So make sure to like, subscribe, and share this for more. So we start off with the BOJ, where for the first time they did hike interest rates finally, and this is what the markets were speculating all along from the start of January. That easing policy that they've been having for, I think, the past couple of years has to come to an end at some point. And now that things are looking up in the Japanese economy, this probably was the right time to do it. And the fact that it came as a surprise, because we were expecting it to be maintained, but it came in at 0.25, which surprised the market. And we had the USD JPY pair moving down gradually. Now, this still on this pair, we had a very interesting day because number one, we had the BOJ, and number two, we had the Fed speaking later during the day, and this was at around 9:30 p.m. local time. Now, with the BOJ now expected to continue with its tightening cycle, the focus now shifts from when are they going to tighten to what is the pace of this tightening that they're going to do. So usually that's what we've been seeing, especially when, for example, the Fed starts easing, where if they start easing or if they start hiking rates, usually the conversation shifts from, okay, they've done that. Now, what is the pace of these other consecutive meetings where they're expected to ease or to tighten? And that is what traders are now trying to evaluate. Are we going to see a faster pace of hiking by the BOJ, or is it going to be much slower, much more reserved or controlled? So in the meantime, the USD JPY pair has been on a downwards trend, and we'll explain why the dollar in the other end of things is expected to look like. But in the Japanese yen side of things, we do expect that weakness on the longer trend. Remember, on the broader perspective, we had weakness in USD JPY for the longest time, and it seems as though finally we might see signs of that huge upwards trend being reversed in the market. Now, later in the evening, we had the Fed coming out, and if you compare how their speech was in June and how their speech was this July, we can see that there are subtle differences in their tone and in their dovishness. For example, in June, they used to talk about inflation risks and upside risks for inflation, but now it seems to be a more balanced approach. Remember, the mandate of any central bank is employment and inflation. And now, at least for yesterday's meeting, we had them talk about the two things at an equal measure instead of just focusing on inflation. And this shows that dovish tilt in the Fed, and that is why the market has interpreted this as language that is satisfactory enough to warrant belief that we might start seeing our first cut soon. Now, based on that meeting, we also heard the Fed saying they're very content with how things are going with regards to inflation. And this is good news if you're expecting a cut in September. So now the next two readings for employment and inflation are very crucial to the strength of the dollar and to the markets. And that is what we need to be cautious about, especially now that we have the NFP reading coming in tomorrow. That is one thing that is very crucial, and traders will be monitoring it more closely now that the Fed is content with the previous readings. And if this reading goes in line, then it should warrant that September cut. So tomorrow's reading is going to have a very huge impact on the market. The other one is the inflation report that is going to come in mid-month, and that is also something that's going to guide the Fed. Now, these two readings are now more than ever more important because they're just before the cut that is going to be there in September. So those are two things you need to watch out for. Now, on that USD JPY pair, if we see any retracements again, we're simply playing this downtrend. So if you see any retracements or pullbacks, then you'll be looking at key levels to continue lower. Finally, we have the Reserve Bank of Australia coming in next week, but that we'll discuss in a later episode of the Market Watch series. If you enjoy this analysis session, remember to like, and if you want to trade either the pound, the dollar, or the Japanese yen, you can start by clicking the link in the description, and that will take you to your account opening process. My name is Samson Mzera again, and thank you for staying tuned for this one.